Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this trading week, especially during trading hours. Some of you might have missed me yesterday for EWO Trader Live. I know I missed out on the session with Ryan and Rob. I was traveling back, so thank you to both you, Ryan and Rob, for covering for me. Got caught up on the overall session on the way back. It was good to listen to get caught up on this week's news. Without further ado, let's go ahead and get started into TradeFinder Live. So if you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This disclosure disclaimer agreement is available on our website at all times, so please feel free to read it in detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away from it, though. Other than that, Chairman Powell testified in front of the Senate Bank committee today and left the door open for more than one rate cut this year. We'll see what ends up happening. We get kind of a seesaw back and forth with these news outlets, so we'll see what ends up happening. I'm very interested to hear Rob's thoughts and the impact that's going to have on the market. So without further ado, the man of the hour, Mr. Rob Roy.
Hey, Zach. Glad you made it back to Florida okay. Welcome, everybody. And those of you that join us for EWO Trader Live, we'll follow up with what I talked about yesterday. And for those of you that weren't available there because you're not part of the EWOTrader.com family, we'll get you caught up on what's going on as well. So if we take a look at the charts of the market, you can see that looking at the SPY, I kind of thought my comments yesterday was that I felt like we had a little bit of a run up here. We broke this resistance level and we had a move up on low volume during the holiday week last week, and maybe we might get a little backing and filling and allow the 10-day moving average to catch up. But so far that hasn't really happened. We hung in there pretty well into the close yesterday, and then we've continued to move higher, at least at this point. So far today. But Zach mentioned Chairman Powell testified in front of the Senate Banking Committee today, and in his prepared comments, says the Q&A stuff is all theater with all of the senators trying to get their 15 minutes of fame, or I guess it's 5 minutes they're allowed to speak for their constituents' re-elections and everything. I all think that that's just theater. But in his prepared remarks, he said that the risk of too high for too long could unduly, he used that word again, so that's his favorite word, unduly harm the economy and the labor market. So as Zach mentioned, maybe that's leaving the door open for multiple rate cuts. I'm still not quite there yet on the September rate cut, even though I was kind of surprised at those comments, even though he left the door open for that. Perhaps we do. I'm still big on the December rate cut, but who knows? Of course, all of the senators are trying to get him to make political comments with the election coming up, and he refrained from doing all that. And I do feel like the Fed tries to stay away from politics. But I was surprised that he said that, if they continue to get weak economic news, then he's concerned about keeping rates too high for too long. I wonder if that's some behind the scenes things with the FOMC, that some of the other governors are concerned about that. Obviously, some of the senators made comments along those lines. But anyway, the market seemed to like this slightly more dovish tone to his comments today. And at least for now, we're continuing this move to the upside. I still feel like we are going to move a little more in a 45-degree angle as we head into the election. Along this kind of a slope. So we are a little bit more vertical than where I thought we'd be. And I still think that that is a more likely scenario. We did get above the 61.8% extension. As I said, we did get above that resistance area at 550. But I just feel like this is going to be a little more of a melt up, is the commentary that I've been using in the U.S. market update, et cetera, that we're not going to see this kind of movement out of the market as we head into the election. And then, of course, everybody wants to know when the correction's coming, and perhaps it's a buy the rumor, sell the news. And once we actually do get the rate cuts, then that is when we start to see a little bit of a move lower as the reality sets in that the Fed feels we need to cut rates, and perhaps earnings reports in the next quarter are not going to be so good. All right, so not much else to say about the S&P. I do just feel like some sideways stuff and allow that 10-day moving average to catch up is warranted. But on the other side of the coin, if we continue with these smaller days, the 10-day moving average will eventually catch up. So we had a couple nice rally days on low volume. One of the things that I mentioned yesterday that sometimes happens when we have these holiday shortened weeks and we get these moves is the traders that took the week off or took a good part of the week off are like, well, we missed out on this. And oftentimes you'll get a retracement of a low volume move on a holiday week. And it happened so far. So maybe it doesn't happen this time and we continue higher. But Powell certainly gave a little more energy to the markets with his prepared statements today. So maybe that's going to negate any sort of backing and filling that could have occurred from last week's holiday shortened week. If we take a look at rates, and you see that rates are coming back down. Talked about this yesterday as well. So we had this nice zigzag pattern. We came down to the 100% extension. We've gone back and tested the previous fib levels, all the rules that you need to do to continue down to the next fib level. So an extended C wave down here to the 161.8%. It's all in place to do that. And if we break this 100% level, I think there's a good chance that we do that. I still feel like it's a double-sided sword, double-edged sword, if you will, that if rates go that low, it's obviously going to be good for the tech sector stocks, the Mag 7, the big ones that have been leading the market for quite some time. Very reminiscent of internet stocks back in 1999 to me. But it also tells the story that the economy is weakening significantly. So that's why you have to be careful what you wish for on lower rates. But we'll see what happens when we get down here to this 100% level. Are we just going to come down and test it again, or do we break it? And I do think if we break it, then 161.8 is the next stop. If we look at the dollar still is not relabeled. We're still in a qualified wave 5 to the upside pattern. The TNX did relabel as they thought. I still think perhaps that occurs with the dollar because it doesn't make a whole lot of sense that if rates are going to continue lower, which is certainly not supportive of the dollar with the amount of debt that we're carrying in the U.S., it does make managing the debt easier. But if it makes managing the debt easier, then it gives the government more fodder to issue more debt. So if we see the dollar come back down to this 104 level, do we hold this? I think the ideal scenario is staying in this trading range, this range that we're in between 104 and 106. It shows that there's still enough global faith in the dollar, even with the amount of debt that we're having, that they want to hold dollars. But we don't want to get to the point where the dollar gets so strong that it hurts companies' earnings reports even more than the economy might from the exchange rate transactions, etc. So far, so good on the dollar. We'll keep an eye on rates, see where they go. Let's take a look at the VIX. And been talking about this 12.5 level forever. It seems like we just seem to just continue to stay there, right in this 12.5 level. We do have this descending triangle pattern. All the lines that we had before are still here when we had this trend to the upside. And then we broke that and then have this set of lower highs and the support clearly around the 12.5 level. We probably will break out of this triangle. Most triangles do break out. And we can go lower, just as a reminder. But I don't think it's going to be a big vertical move lower, because I don't think we're going to see big spikes to the upside in the market. So I think perhaps a melt down in the VIX coincides with a melt up in the markets. And we have had the VIX down around 10 or below. But while we have this triangle, we have to be aware of something unforeseen that could create a volatile spike to the upside in the VIX, and then a spike down in the actual market. But it could break lower as well. I think it would be a bit of a black swan event that could create that now, as we seem to be on a pretty clear path towards rate cuts. It's just when are they going to come? They tried to get Powell to, some even specifically said, when do you plan on cutting rates? And he just would not take the bait. And he said, I'm not going to get into an expectation of when. But in his prepared comments, they said they were a little bit on the dovish side. All right, looking at the rest of our markets, if we look at the DIA, backing off a little bit today, but has recovered some. As you can see, we are bumping our head right at the 100% extension on this C wave of the zigzag pattern. And now we want to know if we break above that, are we going to come test the wave 5? Seems like if we do that, then we are going to come up to 161.8% extension on the DIA. But just a little bit of bumping our heads here, as I said, against this 100% extension, which is all normal because it's right where the zigzag is set to end unless we have an extended move. If we take a look at the DMI, it's a bit more constructive on the Dow than you might think because it's been, you talk about a melt up. Now, this is a good example of what I'm talking about that I think the S&P could do. See how it has been moving higher, but just kind of other than a little blip there when we came back down and we're just kind of creeping to the upside. I think that's the scenario that the SPY does going into the election. So that would give you a good indication of my expectation. The market doesn't care what I think is going to happen. It's just that's what I think is going to happen. But if we can break above this 100% extension on the Dow, the DIA at least, we'll look for that wave 5 high. And then if we break above that to this 161.8% extension, is this a big continuation of a wave 5? I've surmised that perhaps this wave 5 pattern is complete, that we hit this just above the 38.2% extension, less than 100% extension. So you come back to the previous 4, we've done that. So I feel like this zigzag is starting a new impulsive move on the Dow, even though the algorithm is still holding the possibility that this could just be a very complex move here and that we could have an extended 5. We'll see. But the algorithm's just leaving that as an open possibility. A quick reminder to everyone that every impulse pattern starts with a zigzag. Every 5-wave impulse pattern starts with a zigzag, but every zigzag doesn't turn into a 5-wave pattern. So we'll just watch the Dow and see how we handle this 100% extension. Looking at the Qs, and Led Zeppelin's song remains the same. This is where all the major action is. But we're getting a little bit extended here. I made this comment yesterday too, though, and we're still a little bit extended, although well off the highs, as you can see currently. But I do feel like we need some sideways stuff here on the Qs. We're getting too vertical, and when we get vertically to the upside, you get a bit stronger corrections on a move lower. And we don't want to see that if we're going to have this melt up scenario, because that could mean that black swan thing, something unexpected happening, creating a spike up to the VIX and creating a move down in the markets. Anything that's not a real severe move would still be okay, but it would be nice to see the Qs just take a break. Just go sideways here, back up a little bit, let the 10-day moving average catch up. Let's build some energy and momentum for another run higher up to the expected C wave extension up there around 520 on this big zigzag pattern within a wave 3. I love this pattern. I love to see zigzags within a wave 3. Those of you that have been listening for a while know that's my favorite of all directional patterns. And we'll see if we can continue that movement to the upside. But just calm down just a little bit, I think gives us a better chance to go up and hit that. If we continue vertically up here, then when we hit that level, we may come down a bit stronger than if we can kind of move towards a bit more of a 45-degree angle. This feels just a little bit overdone right now. And looking at the IWM, we talked about this yesterday as well, this triangle pattern here. We came out, we broke the triangle yesterday, looked like, all right, all we did was test the breakout and we're moving up, but now we're coming back down a little bit again, although at this point in time we are trading right on the 50-day moving average. So we do have a higher low from last Friday's trade, and maybe that can propel us to continue up towards that 210 level here on the IWM. A quick reminder on triangles: three primary ways they break out. Sometimes they break out, they come back and test the breakout, and then the move continues. Other times they just take off and run without a test. And then the third scenario is a false breakout, where they break out and then they come back down, and then the big move is actually the opposite direction. So that's the head fake scenario. Why we talk about confirmation days, follow through days, etc. All the time is that that's what you need to see things continue. And note that on this breakout day, there was not a confirmation day. And then we tried to go back up, and then we came back down and tested it. So all but the take off and run scenario, the other two are still possible here on the IWM. So we felt a little bit better about this from a risk standpoint yesterday with this move up, with the small caps being widely viewed as a good indication of risk tolerance in the markets. So coming back a little bit today just brings a little bit of, well, maybe not. Maybe it's just going to be the Qs, and that's it. But I don't think that's going to happen. I think we'll have just a coordinated melt up. I'm not as confident on the IWM as I am on the Qs and the S&P and the Dow, just because the IWM oftentimes marches to the beat of its own drummer. But the breakout could be interesting to see how that plays out. All right, now let's move into the crypto world. We take a look at Bitcoin and talked about this in the U.S. market update as well. I know there was another crypto exchange that went under, and they dumped a whole bunch of coins onto the market, and more supply obviously affects things. The markets are supply demand, so you put more supply in, going to put pressure on prices. There was a comment on the U.S. market update that Germany, the government of Germany, dumped their Bitcoin. I haven't found that comment, but perhaps that is true as well. And so you just put a whole bunch of extra supply out there, and it takes a while to soak all that up. I did mention that if we didn't hold 60,000, we would likely be coming down to this 52,000 level and do it rather quickly, which we did. We got awfully close to it, and that was because we had such a vertical move here in the end of February, this move right in this area. And so there was nothing to stop it on a potential move back to the downside. We take a look at Ethereum. We didn't hold 3,500, and so that we're probably coming back down to 3,000 then. Same scenario there. The move from 3,000 up to 3,500 was just boom, and that was on the anticipated approval of the ETF for Ethereum, and just nothing to hold it on the way back down. So we're back down here at the support line of this big descending triangle that had the vertical breakout, and now we're trying to hold 3,000. So far, we've been able to do it. That's a key for Ethereum. If we don't hold that, then it looks like the next stop would be 2,500 on Ethereum. But we're trying to hold 3,000 here as we seem to have held just above 52,000 on Bitcoin. Let's look at the metals. Looking at SLV, we talked about this as one of our case study consideration for last week, and we had a big blast off move. Been consolidating since that. That's healthy. You don't want to see it just continue vertically up like that. I know it's counterintuitive. You're like, yeah, I want it to run vertically forever, but they don't go straight up for forever. And when they go straight up, oftentimes they come straight back down. So if we get a little bit of consolidation sideways here, that's what we want. We're right at the base of that wave 5. Remember, I've been talking about these two zigzag patterns that also coincide with this wave 5. And so we have 3 different LA wave patterns, all kind of forecasting that SLV was going to go up, silver was going to go up. And that's exactly what's happened so far. and we're meeting a little bit of resistance at the bottom of this tap box, and that's the forecasted range here between the lower end and the upper end on the tap box, and that's just all classic Elliott wave stuff. And while I'm talking about this, if by chance you haven't gone to hub.com yet, hubb.com, and gotten a copy of this software, it's in beta form. It's free. Nothing to download on your computer. It's all browser based. Go get a copy of it and play with it. A lot of people said they really like it. Obviously, there's a learning curve. So before it comes into full release, you have a chance to look at the features that it has. Zach's going to tell you a little bit later on about the social media aspect of it, where you can post your own ideas, etc. It's just a really great piece of software. So it doesn't cost you a thing. Just go to hub.com and get yourself a copy of it, and then you'll start to learn all of these different signals that occur within the Elliott wave patterns. Let's take a quick look at GLD as well. Slightly different pattern on GLD. We have this triangle set up here, and we did break to the upside and came back down. So far, we're holding the 10-day moving average, and perhaps we continue to move higher with the metals. It would seem that focusing on rate cuts would keep a bid under the metals. So it does seem like perhaps this breakout move continues. We didn't come all the way back down to the point of the triangle, but we broke out and we came back down, and we've held the 10-day moving average. So I think GLD looks to go higher, but seems to be a little bit more volatile action on the SLV side, which is why I've been featuring that. But the breakout so far on GLD looks sustainable, and we'll see if it can continue that upward momentum. Again, it would take something pretty negative that would cause the Fed to start thinking about backing off the rate cuts and perhaps even talking about a hike again. And just don't see that happening. It seems like the data is pretty consistently on the weaker side, which is the focus or forecast on rate cuts. All right, let's look at oil, the one I've been talking about. And here we are starting this correction. So we had all this classic Elliott wave stuff with the perfect zigzag. I mean, this is really textbook. Down to 100%, back up to the previous level, down to 161.8%. We had an expanding triangle there. So we had a complex C wave, and we broke down and we came down to this level. And now we labeled yesterday a large zigzag pattern that could bring oil up towards 90. And inside this C wave, we have this new impulsive move right here. And perhaps we're running into resistance at the end of this A wave, which coincides with one, the completion of a retracement of the C wave. That's one of the rules. When a C wave ends, it usually retraces it and goes back to the B. In this case, we went all the way up and retraced all the way back to the A wave high. And now we're getting a little bit of a break here on oil. Probably won't feel it at the gas pump. You all know how it works. When oil prices go up, it seems like gas prices go up the next day. But when oil comes back down, it seems to take some time before we get the move lower at the gas pump. But at least it seems like we're starting to perhaps create that B wave. So now we'll wait to see how far this B wave comes. We are trading right at the 10-day moving average at the moment. Maybe we come down to the 50-day moving average. That would probably be enough to give us that B wave correction in at least the 38.2% range. But hopefully that's underway, and we'll see where that ends. But at least a little bit of a break from this continued move to the upside. The A wave is the more difficult one, even though we're in a larger zigzag pattern. But the A wave is the toughest one to figure out where that's going to end. But we did have a couple of guides with the retracement back to the B wave, and then we knew the next resistance was here. And so far that's held. We'll see if we can continue this corrective move down in oil. That would obviously be very nice. All right, so we want to look at a few stocks of interest here, and then we'll look at our previous case study considerations, and we'll look for a new one today. If we stay with EEM, as far as looking at what's going on internationally, you can see we're getting a nice breakout of this triangle. We actually sent that out as a alert for our alert subscribers at ewotrader.com. Very nice symmetrical triangle, and we are breaking out here on the EEM, working well so far. So this triangle is profitable at this point in time. We might have a little bit of resistance right here as we go to that previous wave 3 high. And then we'll see if we can break above that. If we do, then we could be off to the races on the EEM. But maybe we have a little bit of bumping our heads here against that previous wave 3 high. But so far, looks good. So here's one of the scenarios that I was talking about with a triangle, is sometimes they just take off and run. That's an example of what I was talking about, where we showed a couple cases of a breakout and testing the breakout. This is one of the scenarios where it just breaks out and moves. I know a lot of people have been asking about SMCI. We talked about that in the beginning. And when you look at SMCI, we can see that we are in this trading range. And what's keeping a bid, I think, underneath this, and what would make you perhaps consider an aggressive speculative bullish trade, is there's a lot of whispers that they may be the next to announce a stock split. And if they do, obviously that'll rocket it up just like it did NVIDIA and Broadcom, etc. So we'll look and see what happens when we get up to this 1,000 level. So the aggressive trade is to trade it up to 1,000. And then once we get there, see if we continue to make that move and break higher or come back down. And that's actually going to be our case study consideration for today, is for SMCI to come up, test this 1,000 level. Seems to have a clear path with interest rates where they are, Powell's dovish comments, and then the whispering behind the scenes of a potential stock split. Looking at NVIDIA, we always want to see what's going on in NVIDIA. So far, this one's following suit, unlike what the S&P has been doing so far, where I had the comment that I thought this one was going to be more of a 45-degree angle, and you can see it's following that arrow so far. Once we had the big split, I just don't think we're going to have the vertical type of moves anymore out of this. When institutions own a stock, lots of institutions own NVIDIA. Some of this is repetitive, but some of you haven't heard it before. And welcome to those of you that are new. When an institution gets all that stock on a big split like NVIDIA had, as it continues to move higher, they tend to sell some of those shares so that they can book some gains and then hold a major position still in the stock. And their benchmark is they need to outperform the S&P if they want to get their end of the year bonuses, which is where they make the most of their money. And that tends to keep a lid on vertical moves because there's some selling sprinkling in there. So it's not just everybody is buying this stock because it's viewed as the top dog in the whole AI space. So NVIDIA is cooperating along that 45-degree angle. And let's take a look at Tesla. Got a little bit vertical. I even thought this might be something to consider on the short side. It's still pretty vertical, and it sure creating some interest on my side. I can tell you, as far as a potential, at least a 1 or 2 day short position here on Tesla. When you get these vertical moves like this, you tend to get quick corrections. Now, I don't want to make it seem like it's going to correct all the way back down here to 200. I'm not saying that. But when it gets this vertical for this long, oftentimes you do get at least a real quick retracement. And you can see where we are here, right at that recent high from back at the end of December. And we got there awfully quickly. So it does give you a temptation to just take a quick move lower here. So I think that's something that could be in a very aggressive short-term trade as well. Perhaps a quick short. And I know most people want to be long Tesla. It's such a loved stock, but that's too vertical of a move. So too far, too fast kind of thing here. And you can see not only is the 10-day moving average trying to climb the hill to catch up, but it's also separating significantly from the 50-day moving average. We have an earnings report coming up on Tesla, and we know they delivered more vehicles than expected, but we also know that they've been cutting costs dramatically to do it. So how's that going to play into their earnings report? That'll be the key with what occurs with Tesla on their earnings. So that's one that I think is really interesting for a quick downward move, even in this current environment that we're in. Speaking of downward moves, we've got a little bit of a move down here in Microsoft. That's one of our case studies. We looked at that one on the 25th of June, posted it in the TradeFinder section on the website, on the platform of hub.com, and do feel like we're going to make this continued move in the C wave. But you can see we got a little bit overbought from the 10-day moving average. This is more along the lines of kind of what I thought the market in general would do when you have that holiday shortened week. We had a big move up on Friday, and so we're coming back down towards the 10-day moving average. So it doesn't create any sort of concern, I don't think. It's just the fact that we're coming back down towards the 10-day moving average, which is what should happen when you get a little bit extended. So I don't see anything that's causing any sort of concern here as far as the move to the upside. So looking at, let's just throw Boeing in here because everybody asks about it, but it wasn't one of our case study considerations. Boeing is in this trading range. It's held the 10-day moving average. With all the negative stuff that's come out on Boeing, somehow, some way, even in this trading range, they've managed to create a set of higher lows. So it's so heavily institutionally owned that it seems like it's been supported every time it tried to come down and break this 175 level. And perhaps it can continue this 10-day moving average rise up to this resistance area around 195. Would be about where we would bump our heads again. Also where this previous wave 4 is, although it's still green, so that means we're still in the wave 4, and perhaps we'll see if we get any sort of relabeling or if we move higher and label a 4, which would mean a potential for a big move to the downside. I just don't, what else can come out from a negative standpoint to create that? So perhaps a relabeling is in the future of Boeing if they can get their act together, get all their nuts and bolts in line, if you will, then maybe we start to get a breakout move. And then we would need to really get not just above this wave 4. I think we would really need to get above 200 here on Boeing for that to continue to the upside. So you can see where that line is, and perhaps we can move above that. So if you're looking again for something very aggressive, then maybe just a trade from here up to that 195 level on Boeing would be of interest, but understand that it's probably going to bump its head once it hits that level and perhaps not continue too much higher from there. Looking at some of the international markets, the NVDA just continues to move up. Just seems like it goes up every single day. It's amazing. You know, we had the 2 wild days during the election, and then other than that, it's just been a classic move. Now we're at the 161.8% extension. This is the same thing that we saw in the Qs. If we start to move above that, you have to wonder if this 5 is going to relabel to a 3, as it did on the Qs, or are we going to have one of those rare moves to a 261.8% wave 5 extension? As I've talked about in the past, that does happen. It has happened before, but not a whole lot since I've been trading Elliott waves since 2001. It's occurred, but it's just a fairly rare occurrence. More often than not, if you move past that 161.8% level, this relabels to a 3. So exact same commentary I was making a couple of weeks ago on the Qs. They relabeled. What's going to happen on the NVDA? Now, we did have a case study consideration that we talked about here in TradeFinder on EWT, and we took that off because we hit our target. Target price was 56.22, and you can see we got above that. So that was a nice winner. So we're going to take that off the list, and it has been closed off on the website. So that one's done. SLV still on there. GDX is still on there as a potential move higher, but everything is looking pretty good on the case study considerations within the TradeFinder platform there. So let's go back, and as I mentioned, we're going to take a look at SMCI as our case study consideration for today. You could look at a short on Tesla as well, but I think with what's going on in the marketplace, SMCI seems to make sense. So do feel like it's going to come up and test 1,000, and then we'll see what happens if we can keep that bid underneath it with the possibility of a stock split announcement in the future. We still have to respect the fact that we're in a 5-wave to the downside pattern. That could happen on the next earnings report, etc. But for now, seems like it wants to at least come up and test this range. So we'll watch that. And Zach, as I said, will come back in a few minutes before the end of the hour and show you how to post an idea on the website. I think one of the great features, aside from all the technical stuff, all the LA Wave stuff, and everything else that the platform does, you have that social media aspect where you can post your own ideas and people can vote on them. It's always interesting to see other people's opinions. And, if you disagree, that's great because disagreements make the markets. So we don't want to go through and, make rude comments or chastise people for their views if you have a different view. Differing views are what create the markets. That's the whole crux of it. If everybody viewed the market the same way, there'd be no markets. All right, so with that, Zach, we'll go ahead and see if there's any questions before you come in and show them how to post that idea.
That sounds great, Rob. Yeah, lots of interesting commentary to follow up with you on what you covered in your presentation as well. But let's make sure we get as many questions through as we can for this session. We'll start out with SLV for Jay.
Okay, well, still, we went through SLV a few minutes ago, and that is just really working extremely well. We had that one last week, and then it exploded higher. So nice move so far, and the consolidation right here at the bottom of the Wave 5 tap box is a logical place for it to find a little resistance for 2 reasons: the vertical move up and the bottom of the tap box. I don't think SLV is done going higher. We have the 2 zigzag patterns and then the midpoint of the tap box. So I think we're just taking a bit of a momentary break and a constructive break to allow the 10-day moving average to catch up before perhaps we continue moving higher on SLV. So I think that is doing everything it's supposed to do, making a lot of sense. I don't think that move is over.
I just I knew I wanted to go to Jay's question because Jay had 2 symbols for you, and I just slipped and said SLV. Let's go over to AMD for Jay as well.
AMD, all right. AMD is one of the stalwarts that we talked about in the past. We finally had this break. I've been talking about how understand that if you wanted to be really aggressive and go long AMD, know that we're going to bump our heads against resistance here at 180, and that's where we are right now. So maybe we take a little bit of a break. You can go back over here and see this resistance that occurred back here in February and March, and then we traded through it in April. So 180 is going to be resistance in this area. But wow, if AMD could break above that level, and we're a little overbought. So if you are bullish on AMD, you don't want to chase this now. If you caught that move, that aggressive trade, kind of all of the other aggressive trades that I was talking about that look very similar to this, if you caught that, great. But we expected a little bit of trouble here, and we have some separation from the 10-day moving average. But if we can go sideways for a few days, allow the 10-day moving average to catch up, and then break above this 180 level, then you can see with the vertical move that we had down here on AMD from 220 plus all the way back down to 180, there's nothing to stop it from going back up and testing that area again. So you want to watch this one really closely. If it breaks too vertically now, there's less chance of it holding. So that's why I say if it would go sideways for a couple days, just consolidate in this 180 level, let the 10-day moving average catch up to it, then break above it. It has a much better chance of taking off and running here. And I do think that's one to keep on your watch list. Keep an eye on it. And if we can get above 180, then we might really have something going on AMD. And it would be fun to see. So, yeah, we had the aggressive move up to resistance. Now we're there. Now let's see what happens. Can it break it?
We shall find out. Let's go ahead and go over to UAL for Beta Roomba.
Getting into the airlines here. See what United is got going on. It's kind of interesting. They talked about record airline travel over the July 4th weekend, and yet the airline stocks aren't really participating. I think fuel costs are playing in there with the movement to the upside in oil. But it's kind of surprising, and I know UAL have issued some negative commentary, etc. But we are holding really close to a 50% wave 4 correction. It is labeled as purple now, so that means that the algorithm views that could be the end of the move. So consolidating right in here, not a whole lot of support going back from the beginning of the year, but consolidating at a pretty good fib level, a 50% retracement level. Maybe United can hold here and we move higher. You wonder, once we get out of the summer season with some chinks in the armor on consumer spending, are we still going to travel as much? Perhaps that could be a negative for a potential move to the upside in a wave 5. But for now, just you look at it and say, okay, we have a potential wave 5 to begin. We're at a wave 4 that could hold, but we're not even above the 10-day moving average yet. So if you were aggressive and it got above the 10-day moving average, you could take a shot that it's the beginning of the wave 5. If you're more conservative, let it get above the 50-day moving average first. Hard to get really bullish on a stock that's below all of the major moving averages that I look at, 10, 30, and 50, at least on a shorter term. I look at the 200-day as well on a longer term basis. But for the shorter term, you don't really want to be long when you're below all those moving averages. So let's see if this 50% area can hold, if we can bounce back above the 10-day moving average, and then set our sights on breaking above the 50-day moving average. But yeah, when you hear all this chatter about record travel and airlines fully booked, it makes you wonder why the airline stocks aren't performing better.
It is interesting, isn't it, Rob? And I was just reading more about the acquisition that Boeing had over Spirit Aerosystems. And there's a few different points on the Boeing topic that I'd like to make, but I don't want to take away too much time from our Q&A and audience here. So will be interesting, I think, as well to sum it up in short to see what the future holds for these airlines. Let's go over to, we will go with NVDA, or Will. I know we discussed that a bit. If you don't mind bringing that up and giving your final thoughts. Okay.
Yeah, we did talk about NVIDIA before. I think it's cooperating well, moving along the 45-degree angle here. I think that's exactly what's going to occur. I gave the reasons why before on the fact that I feel like institutions with all those extra shares will siphon a few of them off, maintain a large position, and it's just enough selling to keep it from having these more vertical moves. But I don't think the story is over in NVIDIA. I think we're going to continue to go higher. but I just don't think it would be realistic to expect the kind of moves that we had at the beginning of the year and from May into June into the big split. So you can see I've drawn the arrows here, and the one I consider now is a little bit flatter, a little slower degree of ascent, and so far it's working on that very well.
Very well. Thanks, Rob. Maria here says, if you have a target based on an Elliott wave pattern using the daily weekly charts, do you spend time on the 3-minute chart? Does the 3-minute provide foreshadowing, or is it really just for the entry and exit? Thanks.
It's more just for the entry and exits. The 3-minute charts give a really good viewpoint of where, from a very short-term basis, this might be if we're running up, then we could hit some resistance here. So that's why I use those. So that's the reasoning for entries and exits. Other than that, the 3-minute chart's just too far away from a daily chart. So not so much from general pattern identification or forecasting for potential points, but more for, when it's time to get in and out. I look for those when it's a bit oversold or a bit overbought, whether we're trying to get in or out. So, that is correct.
Thanks, Rob. Question from Wigmar here. Can a wave 5 top be lower than the wave 3? If you look at FX, Novo, Nordisk, NVO at daily chart, Elliott wave suggests wave 5 target starting lower than the wave 3 to above wave 3 point. Thanks, from Denmark.
Well, Novo, the lower part of the tap box is lower than the wave 3. But as you can see, the midpoint of the 5, even though they're drawing it there, is because they don't want to put it right in the middle here and block out the 5. So the algorithm labels it there so it's easier to see. The lower end, it will not label this, so it's still currently in the beginning of the wave 5, the force purple. So it does feel it is underway, but it won't confirm it and label it until it takes out that wave 3 high. So even though the algorithm thinks we're in the wave 5, you won't see a 5 show up until that 3 is taken out. But as far as your question on can a wave 5 be below a 3, no, it has to take out that 3 to be classified there. So this is giving us the range, but the expected move is always the midpoint. And it's like, well, it could be in this area, which means that maybe it never actually classifies as a 5 and then relabels, is kind of what that would be leaning towards if that were to occur. But that was a really good question.
Agreed. And so to follow that up here, we have a question from Maria as well, going back to Mr. Softy. The ADX looks on the daily looks good to the 161% level, but weekly has ADX triggered to the turning point rule because the DMIs look pretty good still.
Yeah, with today's pullback on Microsoft, we're getting a little bit of a tick down on the positive directional indicator. That's not really a concern. A little bit of a tick up on the negative is, though, and just considering the fact that we have been moving up, other than a sideways day yesterday and a little bit down today, that was enough to tick the ADX down just a hair, which is kind of interesting because we've talked about before that while the two directional indicators are very responsive to day-to-day movements, the ADX is a touch more lagging. So even though you would look at this in general and say it's constructive, there's a couple little things that could be slightly concerning there, but in general terms, it's still constructive, and we have to remember we're still above the 10-day moving average. Now, if we switch over to the weekly and look at the weekly, you can see that we did break down back below 40, and that told us that this move was over. So this was where we had resistance, and we broke down up in this area is what I'm talking about. Right through here is what occurred. And that was signaled by the ADX breaking back below 40. Now, this is what I call round 2. So when we get a second setup on the DMI, you get the ADX turning back up, you get a reseparation, you get this kissing that I call it of the two directional indicators when they come together and then they touch and then they separate, and it did it twice here and never really got a significant break of the negative above the positive, and the positive took off again. I prefer when this occurs for the ADX to get below 20. So I rather see the ADX come get below 20 here and then curl and turn back up, because I feel like that gives more momentum and energy for a continued run on a longer term basis on a weekly chart. When it tends to come down here and curl up earlier, it just doesn't seem like it lasts as long. And that's why we kind of just have the 475 price target and not all the way to 500. And you could make an argument, well, I mean, do you really think it's going to go to 475 and not go to 500? It could go to 500. And perhaps that does eventually happen. But I do think that the DMI on the weekly is showing, yeah, there's currently some strength, but I don't think this is, off and running for the long term here, because the ADX turned up a little too quick. So that was a good, I'm glad you asked that question, because that was a good little educational thing on the DMI. You have a strong move and it rests a bit, ADX comes down, and then you start to take off again, regain momentum. I prefer the ADX to come down, get a little below 20 and curl back up again. Doesn't always do that, but what tends to happen when it doesn't is it means that there's a limit to how far we're going to go. So if we do get to 475, then we'll have to relook at everything and see if the DMI shows a potential move up to 500. Another one of those big round numbers, the tractor beam effect that I talk about, on just being drawn towards those big numbers. All right, Zach, let's do one more question and then let you show them how to add in the SMCI into our case study consideration ideas on the platform.
Yep, you read my mind, and I just wanted to second that thought. That was a very well thought out question there from Maria. It's always great to see when you're able to teach some educational components on the charts as well, and go back over them for anyone that might need a reminder. So we'll do Amazon to wrap up the last symbol before heading over to the platform.
Yeah, that's a good one to finish on, and that's one of the things that I really enjoy about this Q&A as well, Zach, is not only do we come up with really good symbols and good potential setups to look at, but every now and then when you get one that gives you a chance to illustrate some educational rules, those are the really good ones as well. So Amazon is continuing to creep higher. I like the way Amazon looks. You can see it's more in the 45-degree angle that I've talked so much about. The only negative here is that as strong as the ADX is, and it hasn't broken above 40 yet, although it's getting close, the positive directional indicator really hasn't turned back to the upside. So I think there's a limit to how far this can go. And note that we're getting awfully close to 161.8% extension here on this zigzag. And it's telling us that might be it. It happens to coincide exactly with where the wave 5 is. See how that 161.8% extension just dissects where the 5 is? So the center point of the tap box. So perhaps we're starting to get to a point where maybe we're getting a little extended on Amazon, and the positive directional indicator is kind of telling us that as well, even though the ADX is still moving to the upside. Hasn't quite broken 40, but it's getting awfully close. A positive sign is that the negative directional indicator hasn't turned up yet. So we're just getting a little less buying action here, but we really haven't had anybody step in on the short side yet. But it does seem like maybe we're kind of running out of a little bit of steam here on Amazon. We'll see once we get just a little bit higher. You can see we're right at the 200 level as well as we speak. So, a lot of issues here on why Amazon may be, at least for this impulsive move, about to run out of steam. Certainly been a nice move, but it does look like it's getting a bit tired.
Very well. All right, Rob. Well, as you mentioned, I think I'll highlight the overall aspects of the vote and community factors throughout the platform, rather, that you mentioned a bit earlier. Before posting that idea, each time we go through these sessions, I like to highlight a different part of the platform that are still, as we know, being updated. We're still in beta form, about to roll into production, so there's more to come, but I just like to go back over certain sections each time to give a quick refresher. So for this one, we're going to look at the community aspect and go to the trust ranking as well to show what Rob was talking about there. So as you can see, you can click on members and the leaderboard, and now we see a list of the leaderboards along with the metrics that track that in order to put you in what slot you are, whether you're a top 10 all the way up into the thousands of members that we have now. Another thing that's important to remember is once we go over to these ideas, what affects your trust rank and what gets you high up on that leaderboard we were just on is, one, obviously having a lot of successful ideas that hit your target price or maybe outperform your target price. And two is agreeing with ideas from other members that do that as well, that qualify for both of those as well. And it's important to remember. So here I'll just click on, let's find the TradeFinder one here. Right now, I agree with it. This is my idea, so that wasn't very smart. Can't vote on your own idea. Let's go to, I just wanted to make sure I pick one that's not a subscriber here. So here's my idea. Let's say right now I'm agreeing with it, and so far it's looking good. But say something changes in these next 2 months and there's a drastic, some black swan event, something along those lines, the stock comes crashing down, and within that 3 months I still come back and disagree. That would positively impact my trust rank so that I would be pushed up higher in the fact that I disagreed with the idea that ended up not working out, just as if you agreed with an idea that did work out. So again, much more detailed tutorials and webinars even that are coming soon on all of the different pages throughout this platform. I just, with the limited time, only pick about one section each time, each TradeFinder live session, rather, that is, to go over and highlight that feature. So without further ado, let's go ahead and get into the idea for this session. And again, real quickly, a lot of you have probably heard me say this by now, and I apologize if I sound repetitive, but as Rob mentioned, we always have new people, so it's important to say these things over just in case of that situation. So we have an idea and a post. A post is essentially a draft idea. The criteria for an idea is not fully met. A lot of it may be met, but there's something you need to see, confirmation, follow-through day. There's something from that criteria that's not met, so you can write all that in the post. Once you're ready for it to be an idea, this would be essentially executing the trade in real time as if you were just paper trading through a brokerage. All of the data, all of the information will be there as if it was a real trade. There's just no risk or capital on the line at this stage. So for this one, this is going to be SMCI. And I believe, Rob, you said this is going to be an idea, not a post. Is that correct?
Yeah, we'll go ahead and do this as an idea.
Alrighty, and so we'll go over to the symbol search here to find that symbol, which is SMCI, for super microcomputers. Rob mentioned that we were going to test that 1,000 range, ideally. And what was the time range on that again, Rob?
Let's do 2 months, and then you can show them how to customize the time frame.
Perfect. Yeah, I like when we're able to do that. So as what Rob was referring to there is you can see the set intervals of time that you can choose from here. However, if there's something that you need a bit more specific that's not listed within the set ones, you can hit custom and go down to the very exact day that you would prefer for this trade to quote unquote expire. So Rob said 2 months. So we're in July, 9th right now. So we'll go over to September 9th. And that does happen to be a Monday. I always like to make sure it's a trading day. So if it was 2 months and that happened to be a Saturday, I would just pick that next Monday, so on and so forth. So for this one, we're just going to be continued in the effort of time, in case Rob has any final thoughts to wrap this session up with. But overall, keep looking out for more news and tutorials to come out on the platform. We're getting close to development, and there's tons and tons of exciting features that we're excited to get out to you, of course. So back over to you, Rob.
All right. Thanks, Zach. And I do think what you showed them today was very important on how you can agree with an idea. And then I talk so often about The markets are dynamic, they're not static, they're ever changing. One of the reasons that I like Elliott Wave so much is it's quick to change with the markets. And so if you do vote on an idea and then something materially changes and you're like, well, if I would have known that, then I would have felt differently, you have the opportunity to go back and change your vote because of something that was unforeseen at the time that you actually made the original vote. So I think that's really cool that it allows you to adapt to the changes in the market. And if we're not adaptable, we're not going to survive very long in the world of trading, that's for sure. So good to see you back, Zach. And thanks, everybody, once again, for spending part of your trading day with us. For those that are subscribers at ewotrader.com, we'll be talking to you Thursday night in the Insiders meeting. And I look forward to chatting with everybody then. So enjoy the rest of your trading day. Take care, everybody.